Hello, this is Brad Harvey. Welcome to our Ask the Advisor video series, where we answer your financial questions. Hello, this is Brad Harvey with Ask the Advisor series, and the question for today is, with all of the market volatility that's been going on, should I be making changes to my overall investment strategy? And the short answer to that question is maybe, and I hate that as an answer. However, it depends on your individual circumstance. If you are a year away from retirement, then perhaps we should be looking at changes to your overall investment strategy, but maybe the cows are gone and we can't close the gate now because they're already gone. That's a Kansas phrase that I grew up with. But if you're uncomfortable with the level of volatility that you have in your portfolios and your investments, then perhaps it's time to take a look at ways to mitigate some of that volatility. Keep in mind though, that volatility can be your friend. If you're looking at retirement monies, remember that the only 2 days that are important are the days that you buy and the days that you sell. And if you're accumulating money for retirement over 10, 15, 20, or 30 years, quite frankly, you want the market to go down from time to time or even stay down because your dollars buy more. They're buying low. I know that's cliche, but it's very important. So if over a 20-year period, the market cycles and stays relatively low, and then all of a sudden it jumps up and stays up for 5 years, and then you retire and sell, well, that's ideal because we're buying low and we're selling high. But if that volatility in the interim is making you not sleep well at night, it's making you uncomfortable, then it is time to make an adjustment. Every time we see these sell-offs in the market, it causes a reevaluation and people get a gut check and they can deal with those emotions and hopefully learn from this. This is my third time through this as a professional. And during the 1987 market correction, I was a freshman in college, so I was able to study that one in real time, and it did certainly ignite a passion in me for financial markets and investing. But each time we learn, because each one is a little bit different, and as you go through them, by the second or third one, you start to get a little callous to some of those fluctuations. And remember, stay focused on your goal. If your goal is retirement and that's in 10 years, this blip really is probably not that relevant to you. If you're already retired and you're seeing massive fluctuations in value and it makes you uncomfortable, then it's time to reevaluate those strategies. Just remember, don't make knee-jerk reactions because of what's going on over the last 4, 5, or 6 weeks. That can get you into trouble because that leads you to making emotional decisions as opposed to very logical ones. So this is Brad Harvey with Ask the Advisor series. If you have any questions, please email us and we'll try to get them on for you. Thank you. Thanks for visiting our channel. We hope you found the information valuable. If you want to see more videos about investing, please click to subscribe. If you have any questions you'd like for us to answer, send us an email at him@ragroups.com. We would love your feedback.